Righto, Money Miners, special treat, weekly special. Ali GC's in the house.
I got the weekly GC injection today. Very good.
And I'm the one talking about gold.
I know, it's some parallel universe.
Is this your first episode back since MMS are on the bloody thumbnail?
I think so. Welcome,
How do you feel
MMS.
about that?
I feel delighted. The best open pit mining contractor is on our thumbnails.
Do you
Love
feel
it.
probably as delighted the people that get them for an open pit mining
No,
contract?
I feel more delighted for them.
Yeah, yeah.
I love it.
It's just like there is just like hormones flying for those people. They are just at the peak of their life. They love it.
They are delighted. They're delighted because they got, just a fleet ready for them with latency and capacity and alignment. That's all you want.
All you want, boys and girl. The Rio Arcadium confirmed.
It happened.
And it's right in bloody YJ's midpoint of his recommendation to Bloomberg of what the price should be.
Got to talk about it.
The deal's done. I've never seen so many bad takes about a deal. It's like everyone pretends they know something about commodities all of a sudden because Rio's done a deal, and there's just some awful takes out there on Twitter.
And to think 90%, they're like, lithium prices are too low, yeah. But 90% premium, just, take the cash, put it somewhere else quickly.
Move on.
Yeah, we're gonna hopefully provide some good takes about this transaction.
Where do I sign? Right, then we've got Regis put out some their pre-quarterly, and I've just made a segment out of fixation of imagination around what's going on there with them, which should be pretty cool, hopefully. So
Love
you've
it.
gone into Mac.
Yeah, I've just touched on the Mac raise that come out this morning, or the revised one. Just a few questions I want to ask.
Who's answering them?
I don't know. We'll see.
What else he's got?
That's it.
Something else, right? Rip in. Rio Arcadium confirmed 90% premium to bloody and
You undisturbed?
interesting when you said, and I would never thought I'd say it, that they're amenable to raising cash for it.
I think that's bullshit. I reckon.
Where'd that come from?
It was.
Was it a comment from Jakob? Or?
I just think that's a headline grab from a very small. He created some degree of nothing's ever off the cards, but there's no way they're going to raise money.
You would not think.
There's no way. There's literally just put a line through it. That's just
yeah. Jeez,
Bad take number one.
I'd love it if they do.
No, there's no way.
Oh, you wouldn't think so.
No, you pay some in script if you think that if you want to be more prudent about your balance sheet. There's just no. It's Rio Tinto. They could lever up way more than they've got debt right now and be fine.
Yeah,
they've just finished massive. Well, they're about to finish massive growth kind of capex at Simandou, and Oyu Tolgoi is about to just start printing heaps of money. Their capex profile kind of tapers down a bit, and their balance sheet's fine. They shouldn't raise money. No way.
So what's the agreed deal?
If Rio raise money, I will start cycling 200 Ks a week.
Jeez, that's a big call.
I'll feel good if I do. So it's probably win-win anyway.
Should we start with the numbers for those that didn't catch the deal itself
do it.
then? So Rio paying US $5.85 on the US stock, so that's sort of $8.60 on the CDIs that we have here in Australia. So the price tag is about Aussie 10 billion or US $6.7 billion. Like you said, Matty, 90% premium to the undisturbed. Obviously, the rumour sort of spilled out over the weekend, so they're referencing from late last week, the undisturbed price. And interestingly, which we'll touch on a bit later, you've got Mike and the Blackwaddle team saying they'll be voting against the deal. You can sort of see the chat we had on Monday for more info on that one. The deal is all cash, will close in mid-2025. As we sort of went through, there's assets everywhere, so you need a fair few approvals. You'll also need shareholder approval on the Arcadium side, so majority of those present, plus 75% of the votes put forward. And of course, board approval has been received. You'd have got that from the presentation being given by both Paul Graves of Arcadium, as well as Jakob Stausholm of Rio Tinto. So let's get into our sort of thoughts on the deal sort of talking points and everything in and around that. I think that's kind of interesting. Should we start with the price tag, guys?
Yeah, I mean, it's a you could almost infer from some of the discussions that Jakob had in the call afterwards that they were still going back and forth on value right up until I think the day before the announcement.
Yesterday afternoon.
So
Yeah.
in some way, shape or form, like maybe some of the loud shareholders could have even kind of had an impact there. But yeah, this is like it's a countercyclical M&A, which like a transaction which you rarely ever see from Rio Tinto. It's been a hell of a long time since they've been intentionally countercyclical that I can think of. So like the price paid, they're paying for optionality at the end of the day. It's not like they're paying for 2026 EBITDA. It's not what this deal is being valued on. They're taking a long-term view on the cost curve, which is the most important talking point, I think, and they're paying for the optionality that Arcadium gives them in what they think will be a steep cost curve.
Yeah, Jakob had a really interesting comment on that. He said, we never know where in the cycle we are, but we're not at the top right now. That was kind of interesting one on, kind of reflecting on Rio's tendency to buy in at the top in the past, or that was the sort of reflection I made on it. But the cost curve is the sort of really interesting point. And in the slide deck, they put forward this 2035 lithium and copper cost curve. Kind of interesting concept to put forward, quoted in sort of C3 for those wondering. It's just all in sustaining cost. And they reflect on it being a steepness in the cost curve that's comparable to copper, and that's been the critique for a long time, right? BHP sort of famously not getting involved because they think it just is too flat a cost curve, where the profits you'll make if you're in that first or second quartile don't sort of outweigh the kind of risk, because the marginal producers just aren't that much further up from you. And Paul, the CEO of Arcadium, made an interesting comment that the cost curve is only going to get steeper.
You would say that, but
he absolutely would. But
I think it's worth playing some commentary from Jakob specifically on this. This is the talking point, in my opinion.
I'm standing here with colleagues who have worked extremely hard the whole year to try to look at every single lithium project in the world, and that has given us the confidence about what we want to be part of and what we don't want to be part of, and we became more and more clear that we were very keen on not just developing a spodumene business, but rather produce battery-grade lithium. We also realized that in Latin America, you probably find the lowest part of the cost curve, and therefore we like the brines, we like the more exposure to Argentina. I would say the hard rock opportunities in Canada are very attractive to us as well. So it was not kind of us looking at Arcadium, we were actually just looking at the whole industry and find out what are our criteria. And then suddenly we realized Arcadium had the perfect match for us. And therefore, I'm super happy where we are today.
The hard rock comment was very interesting. And that was the one bit we were unknown about the other day.
He threw that in as an afterthought at the end, right? And he was... And look at this cost curve. This is staggering to me, right? What they're saying is we're predicting what the long-term costs of these assets are going to be out into 2035. Where's the hard rock in Arcadium's portfolio on there? Fucking Q4 and Q3.
Yeah, I assume that's Greenbushes.
Yeah.
There,
so
and then
Arcadium's though. Arcadium's they're picking up Galaxy and I can't pronounce how do you pronounce that one?
Wabauchi?
Yeah. Anyway, I'm sorry, Arcadium shareholders. But those are the spodumene assets, and then in the second half of the cost curve. Rio Tinto doesn't buy second half of the cost curve assets.
It was so funny, right? Because
was he more referring to hard rock as a like talking about hard rock in Quebec, not specifically Arcadium?
Those are both Quebec assets. I think what he's
other ones.
What he's really saying is we want brine.
Yeah, that's the key takeaway. And specifically on the assets, like you said, you can see them in the third and fourth quartile. They are not Rio Tinto assets. And the notion they have on the sort of side there that Galaxy expected to be highly profitable, that just doesn't totally make sense. And Jakob went on to say, we bring stuff on at the bottom of the cost curve. So I think they just got to divest them in time. I think that's the kind of
it's just part of the package, right?
Maybe they do, maybe they don't. Maybe there's optionality if you can, build out IRA compliant stuff and the world goes that way.
Like we sort of discussed before, yeah.
But their fundamental view of what types of lithium producing assets are going to be lower cost, they are like they're super bullish brine versus spod. That's the takeaway, and I think that's like a point of reflection for the entire kind of lithium investment industry.
Do you think did any comments allude to the fact they're going to use this as a bit of a vehicle for further M&A?
They didn't talk about future M&A, but they never would. Like they would never give that away.
But as you said, there's so much. Like even if they got these higher cross corridor or hard rock ones, but then with the brine and everything, like the optionality for further expansion into oil field brines, other brines. If the DLE they become the DLE company, there is a lot of who knows where this could go in the future for them.
DLE is the next talking point, right?
Totally.
Got to talk about it. That was a huge sort of elephant in the room, if you like, throughout this presentation.
And to round off your point there, Matty, you're absolutely right. They want optionality. They oddly enough are attracted to having to just learning really fast in an evolving industry, and they think that Arcadium's multiple different projects at different stages and expertise along the value chain lets them maybe have a competitive edge in learning faster than peers as well. But DLE, this is fascinating, right? We talked about it on our show that we put up 2 days ago, that we were pretty we'd become aware that Rio had invested a bunch of money in DLE, and that they're pretty buoyant the outlook of DLE, and they think that's going to even lower the brines that they have access to in Argentina even further on the cost curve and create more an even sort of steeper outlook there. But I'll play a snippet from the guys on this.
The main question I have is really around synergies relating to technology. So Rio's invested a lot in DLE, as has Livent, and Allchem. And when you sort of put that all together, what does that realise in terms of production synergies or cost synergies at the 3 brine operations in Argentina, or 4 brine operations, I should say, in Argentina?
Well, first of all, and I'll let Paul talk about the technology because he knows more about it than I do, but I've actually studied it quite a lot and spent enormous amount of time with our people. And I spent a week in Argentina looking at it firsthand this year as well, is if you just take a step back, you are having a small lithium industry today, and you have a lot of still the traditional pond solution. If you want to scale that up in Latin America, I mean, you're going to destroy the Andes if there's going to be ponds all over it. The DLE technology is a way of reducing your nature footprint, and the technology is developing all the time, and it is actually the solution to provide the lithium that the world needs. And don't forget that it was really Arcadium that started it many, many years ago. You're the pioneers of it, and we're the fast follower. And bringing our research people together with your people, we already had a first little event last week. There's a lot ahead of us, and we haven't explored it fully yet. There's the right technology, but there's also a tremendous technology development journey ahead of us.
Yeah, just like, I think it's important to understand that extracting lithium carbonate from brine is not a single step process. Easily 20, 25 steps in that process, and DLE fits into a flow sheet, into a process. So it's really important to have the know-how, how the entire process works, and how the different DLEs interact with specific brines, specific environmental conditions. The key to unlocking initial implementation of DLE tends to be that know-how plus infrastructure. But once you have unlocked it, it's incredibly quickly replicable. And so it allows you to expand much more quickly. And so when you think about synergies, I think this opportunity to bring our know-how and our DLE with the if you will, the unlocking potential of the ability to invest more quickly in the infrastructure, it just makes a massive difference to the ability to bring resources on. And most importantly, it's not just bringing them on, it's the ability to then just, we call it copy paste, just copy paste, and you can expand as quickly as you need to once you have that flow sheet running and once you have the infrastructure in place.
Is there so your comment around obviously lowering the cost curve is like if they bring DLE in and make it be able to operate these brines cheaper, but then I assume there's also the part where the ability to steepen that cost curve even more by actually having the ability to bring more brines online because of the water issues.
I think that flattens. I think by applying DLE to the existing brines, you steepen it, because if you just think of the brines at the bottom already, they go lower. So in net, your cost curve steepen. But if you scaled it out, and this is a point Goldman Sachs made in their DLE note like 12 months ago, if DLE is scalable, then your marginal producer isn't spodumene. It gets kicked off.
Well, that's because wouldn't Q1, Q2 sort of be a lot flatter, and then it just goes
because
like
the promise
that assumes that's still there and producing. You might not need that because you satisfy your entire demand by what is capable of being produced.
Because the promise is that the recoveries go from 40 to 60% of your standard pond project to 70 to 90%. So if you think about that in an annual production basis, each of those projects is producing way more. So they get widened out.
Almost double.
Yeah, and then you also have the added benefits of the ramp up being much quicker. They're sort of talking about 18 months quicker in general. Remember, DLE is a catch-all kind of concept. It's not just one set of technologies. So, the potential ramifications, I think just listen back to that bit again and just and hear it. It is very interesting what they sort of got planned and what they're saying around it. I found that super, super fascinating.
If you think of who the major three brine producers are going to be in the West now, it's SQM, Albemarle, and Rio Tinto, and all three of them are going to have exposure to spodumene as well. So they'll probably be conscious about putting too much supply from brines in the market, because they want the tail of the cost curve to still be there, so you can have massive margins on the brines.
Yeah.
But I think the implications for the marginal spod projects out there are pretty terminal.
So it's sort of setting it up to be similar to the iron ore cost curve in a way.
That's the dream. That's what you'd want, but there's no guarantee you get that, because you need and people speculated for a long period of time that the iron ore cost curve would flatten out as you had, but it just had a pretty sticky kind of high cost tail there that hung around and was stickier than people predicted for longer. The people who study the iron ore market do think it will get flatter over time, though, especially as the African supply comes on.
Yeah, but that's counting on a lot of the higher cost ones, but dropping off completely,
or the world coming off its plateau of steel production. So, i.e., demand going the other way.
It is. It's funny how quick the DLE thing has just come into flavour again, just like that.
Yeah.
Super interesting. And it's like Arcadium, he said they were they kind of pioneered DLE, which is true, but what they do, they actually pre-concentrate in evaporation ponds first and then run DLE. So there's no cost advantages from DLE, the Arcadium's DLE yet. But you're betting on the evolution of this sort of technology over time in some way, shape or form too. And hopefully they're acquiring the people with the technical expertise that have the best chance of getting it there too.
Well, it's a big play to be the first. I don't know, because they're going they're thinking obviously we're going to be the first bulk DLE, and they're obviously thinking of replacing evaporation with DLE. That's a big first mover play, which is and
there's
tingles me
tremendous like you said, the environmental benefits, if you could do that, shouldn't be understated either. There's real considerations for the Andes, for the Atacama, everything like that. If when it comes to just like your ability to access fresh water, but if you have DLE, then those things might
which goes hand in hand with better permitting, right? If there's less land disturbance, that should improve permitting times as well.
Yeah. So what about the Argentina side of things?
This is interesting. We got to talk about it. So there was why don't we start with the snippet from Jakub on Argentina and the rise of Argentina?
Not South Korea.
Okay, thanks very much.
Other than I should say, that actually gave me an opening to say we are super delighted with the new legislation in Argentina, the RIGI legislation. That is actually, you really should study that. That's super attractive, and that's going to help us, not just in terms of an attractive tax scheme, but also in a downside scenario, it provides a lot of protections for our investments in Argentina.
So the RIGI legislation that he's talking about, it sort of loosely translates to regulation of incentive regime for large investments. They're talking about tax advantages, customs, and other sort of support around property rights, things that have traditionally been a bit of a challenge in those sorts of parts of the world. And the benefits should be valid for 30 years on projects worth more than US $200 million. And Jakob had spoken in the past about how it materially changed the economics for Rincon, the project that they already have there. And I think it's just great to see. It'll have huge advantages for the country. It's not the sort of be all end all. There are a couple other bits of legislation that need to be refined in Argentina, specifically regarding currency and capital controls. These have historically also been a challenge in Argentina, but it's a huge step in the right direction, in my opinion. Could be a great sort of catalyst to getting more foreign investment in a country that, in terms of mining, let alone all the other sort of potential the country has, just phenomenal potential outcomes. And yeah, you kind of really hope that they can fulfill that advantage. And we've seen a lot of positive steps for them, BHP going in there, Rio, and hopefully other companies kind of follow. And there's a stable environment for that to be a promising place.
The wording there where he said that downside protection is super attractive, because that's the fear you have if you have a change of regime based on, like the Millet government said, change of regime. It might be attractive right now to invest, but what if that government's out? Then there's the tide turns. But like the long term kind of downside protection there is clearly like what's been a big factor in seeing a phenomenal amount of excitement about investing in Argentina again.
Mm. And then the shareholder response has been quite humorous, hasn't it?
Have you ever seen shareholders more unhappy to be getting a 90% uplift in 2 days? So it's kind of, yeah, it is.
Is that where it's trading at now?
It's pretty damn close. It's like 5%.
That's like from the undisturbed, isn't it?
Yeah.
Yeah.
It's because people anchor to high prices, and also like, if Rio are able to execute on what they think they can do with this business, then of course Rio is going to get a shitload of upside. They're paying cash now, and Arcadium shareholders don't get the benefit of it. But at the end of the day, like, this deal goes through. There's not going to be any uplift by kind of agitating now. My opinion, there's not going to be any interloper. This is you got to be pretty happy with 90% uplift in 2 days, even if you're down net, which most Arcadium shareholders are.
Mm. Interesting comment from Jakob as well on making the most of the commodity cycles. You have to pay in cash, he said. It's a sort of interesting
God,
comment.
They better not raise money, because I don't want to fucking ride 200 Ks a week.
Like Rio,
you got to do it too, Trav.
It's got to be like, the commodity cycle's got to be as dire as like, GFC. Like, it's just got to be super dire for Rio to ever consider raising money. Ain't gonna happen.
Yeah, I know we said like, Mount Catlin's like a non-core part of this deal, and it's like you just don't want the DD to go for ages buggering around with it. I think they need to look at, I don't know, whether spinning it out. They need to get K-Drill down there to start peppering Mount Catlin and figure out if there's gold or lithium or something to just make this process go smoother. I think that's probably a first step from Rio.
The short mine life was the problem there, so the quick way to resolve that is just get K-Drill down there, right?
RC Diamond the shit out of that joint and figure out what Mount Catlin's true identity is, and look, spin out, divest, something. I just don't want to see it hold up the deal. I think K-Drill are probably integral to getting this done by May or possibly before.
Why K-Drill and no one else, Matty?
Just trying to think off the top of my head. Actually, it's funny talking about these sponsors. I just can't think of competitors. Like, it just starts.
Nothing comes to mind.
No, nothing like
just
comes
blank.
to mind. Sorry, I don't want to sit here pausing, so I'm just going to say I don't know anyone else that does it. Purely simple.
Why would you need to?
No, well, like you just call Druber.
Yeah, that's it.
Who else is better to talk about a contract with?
Go Druber.
Because you get to have a beer with him. Call K-Drill. Rio, Arcadium, sort it out now. Beautiful. Good, great segment, boys. Love this. Is this one of the more exciting? Is this more exciting than BHP and Anglo talking about it?
No.
It feels exciting. Maybe
it is exciting, but that was an enormous.
That
was an enormous deal, right?
Yeah,
prospective deal.
That was hostile. Hostile deals are always more fun.
Yeah, because it didn't look like it was going to happen. This one looks signed, sealed,
both
and
sides
delivered
wanted
now.
to do it. Yeah,
there were so many moving parts to that one as well.
Anglo was trying to run away, and
yeah,
it was more fun.
I like the the future of this is what's exciting me. The pivotal shift in probably our thinking as well of what the future of lithium is going to look like.
I mean, they talk about a 10% CAGR in lithium through to 2040. It's a sort of rough number, but
Huge.
that's
Yeah, that's another, like, we didn't really talk about it too much, but like the implications for the sector, like there's a lot of
The
bad.
Spod.
Yeah,
Yeah.
for what's the landscape look like as well? I mean, there's I don't know. I think like there's so many like lithium developers out there with a Spod project of some description, and like what's their future look like? I think they probably end up, merging to have relevance to.
Was there comments from
What's
was
that
it
versus
Minrez or
future?
something talking about like Spod won't be forever? Like, was it? I remember comments something like that. Where they identified like Spod's mightn't be the long term thing on the higher cost end. It's like they're going to make money while they can, because obviously this is very, very long term stuff that we're talking about with Rio, of shifting the cost curve and everything. It's not going to happen like that.
Yeah,
It's like there's
it's
a
long term,
Spod-
but
it's like there's a
producing now
Spod
they didn't
window.
buy. Yeah,
like the Brines already are lower cost, but yeah, I think I've heard that comment about the window of being able to, make good money and all that sort of stuff. But yeah,
Good stuff. Right. I love making a big segment out of a 1-page pre-quarterly, which is what's
It's a
happened with
Maddie Michael
what
specialty.
happened with Regis today. So produced, what have they got? 94,500 ounces for the September quarter, right at the upper end of their guidance. So good on the outs front. Added 85 million cash to the balance sheet. So since they closed out that hedge book, the legacy one, 3 quarters ago, they've added 225 mil free cash. So they're in printing mode at the moment. So total cash sitting at 380 million. Now, remember, they've got the 300 mil bullet repayment due in May 2025 for the Tropicana stake purchase. Don't know if that's going to be refinanced or paid or nothing. Don't know yet.
gotcha.
But that's don't forget that one. So not sure.
So that was
how-
just a deferred payment for Trop that they've still got to make.
It is the final bullet payment for
It's
it.
the
but-
facility.
Yeah.
Okay.
But we don't know if that's going to be refinanced or they're going to pay
Sorry.
it then. Who knows?
Gotcha.
So not sure how much CapEx and exploration was spent deployed for the quarter so far, because they've got, what was it, 80 mil growth capital and about 37 and a bit for exploration pegged for FY25. So not sure if that was light on, heavy on, or if this was that 85 truly reflects what the year's going to be. But look, if gold price persists at this rate, them being unhedged, like they could have close to friggin' $250 in cash by the end of the financial year, even after that bullet repayment. So it's obviously looking like it's set up for a pretty good year for them. Now they've sorted the hedging out and everything. So
That's super impressive.
yeah. So look, and everyone talked like on the back of the whole McPhillamys thing, and like they need a growth project and like all that. But I just feel that with gold, people sometimes get caught up in the whole reserves thing with gold, but it's just one of those. Duketon only has 800,000 ounce in reserves, but it just reminds me of working at so many gold mines where you've just only ever got a 1 or 2 year mine life and they go for a decade, like open at depth, and they just gold, unless it just gets miraculously cut off like a Wattle Dam, it tends to keep going. So it's just something to keep in mind. Like Duketon's they got friggin' 10 million tonne of mill capacity there, 7.5's in operation, 2.5's in care and maintenance. Shit, lot of infrastructure. So, and Garden Well and Rosemont aren't actually that deep. Like when you look at it on the cross sections, Rosemont's only sort of proven up to 700 metres. Appears to have this shallow plunging corridor, so it's obviously a lot more lateral to get out there, but looks like still open there. Garden Well down to 500 metres on one side, 750 on the other. Potential for bits in between. So because if you think of when the gold price is high, you've got the infrastructure in place, you've got the underground. It's easier to sacrifice some grade, piggyback off the infrastructure and the existing development to go access other areas if you're already in there. So there's a lot of and still make free cash off it. So there's a lot of I see there still being a lot of long-term potential at Duketon just looking at without going in the weeds too much about the geology and everything, because I fucking don't know. But
Yeah.
it's not like a friggin' there's 2 years left.
You think you'll always just have a
There's
two
option-
year
there's just
reserves
option.
ahead of you, and
Yeah.
you just keep
Rolling.
Yeah, it's
yeah.
fucking. That's what Paulson's was like. It's what Telfer was like. That's what like Daisy Milano for Silver Lake still going. Like, and you just keep. There's options everywhere just to keep going. It's just gold mining in general.
It's kind of their job to make the market really, within bounds, aware of that, right?
Yeah.
Just lead them to kind of think that like this has gone on for so long and it will keep going on, because that's clearly the shortage of reserve life is the angst that people have over the stock. So
it's different to a pit.
Yeah.
Like, it's not like the reserves. You got a reserve because you get to the point where cutbacks just aren't fucking feasible.
Yeah.
Just keep chucking a level on in underground.
Yeah, and it doesn't make sense to drill out to a reserves level confidence when you are underground.
You
can, but it doesn't make sense to add more than 2 years worth to you.
But you can't like to do it like either you have to put in some friggin' huge exploration drives, and really long holes, and then to get the reserve confidence at depth costs you shitloads of money. It's just easier to incrementally do it as you go. As long as you chuck some long holes into to confirm the continuity, so you know it's there. And then you just do it as you go. So
tell us about the valuation then.
Well, and Tropicana as well. Before I get there, JD, they've and you look at their multiple potential undergrounds there. I think they've got 3 going at the moment, just to prove the Havana underground as well. It's a big plant there, but 9.5 million tonne at Trop. So I believe it is like modular in a way. Like, I think you could drop tanks off. You could probably drop some of the grinding circuits off and drop it down to like a 4 or 5 million tonne operation if it did go pure underground. So I think I'm not sure how much the pits have got left there. I think it might only be a couple of years or something. So that's I'll get to that in a bit. So
Matty, Regis today has got about just over 1.5 billion, market cap and sort of net kind of cash debt. They've got the sort of what appears to be the highest FY25 all-in sustaining guidance out of sort of the ASX listed Aussie peers, or the midpoint of like Aussie 25.90 an ounce. So they're obviously super leveraged to movements in the gold price. And interestingly, peers with, similar size production profiles who have some, pretty decent size, cash war chest as well. So this is Vault, the old Red 5, which was the old Silver Lake, Ramelius and West Gold. Their market caps are in the sort of mid to low 2 billion. So they're a fair bit cheaper, on this basis compared to those guys. Mm-hmm. But, like we sort of said before, their production profiles, going forwards, pretty flat for the next few years. And that growth project, McPhillamys isn't there anymore. And that's, as we said, we sort of, perhaps people are, discounting Regis on that basis. So do you think they'd be in the market for another growth project to replace McPhillamys? Just keep going hammer and tong at Duketon and Tropicana and just focus on that? Or alternatively, add themselves to someone else's production profile.
Or have someone else add them to their production profile. Yeah, there's
you missed buyback.
Or buyback.
Come on. What about return to shareholders?
I just want M&A. No, M&A.
What is your deal?
You weren't a banker or anything.
They've got every single option up their sleeve. They've got the higher all-in sustaining cost, but they're producing double the ounces. Like, they're producing 400,000 ounces compared to someone that's lower cost producing 200,000 ounces.
Yes.
You're going to make more money producing double the ounces usually. As I said, I see him as a bit of a Silver Lake at the moment, like starting to go on that trajectory, probably flying under the radar a bit, like unhedged cash harvest mode. 85 mil for the quarter. That's pretty unreal. Like, considering Capricorn added 20, a bit less than 20. Emerald added 18. So it's pretty good going.
On that comparison, Matty, Silver Lake, they wouldn't they were known for being, just kind of focused on managing costs, cash harvesting, never had too much reserves ahead of them, but it kept going. Regis has basically in the last couple of years transitioned from being an open pit miner to an underground miner, and as time goes on, they're almost going to be purely an underground miner. Like, do they have a reputation as being like, good underground? Have they just got like contractors in doing it?
Yeah. They've got. No, it's different. So I think Tropicana, because they're not the operator. That's McMahon's are there, but like Barminco they've had the Duketon contracts there, so it's it's hard to say if anyone's like a good reputable underground miner. Like the contract does a lot. Contractor does most of the work. Probably not the technical side, but I think the contractors like heavily. I know, but those big contracts. And Barminco, I've got them at like Sunrise Dam and with Regis, and they had the big one at. No, I think those alliance types of structures. You've got the contractor have a lot of input into the technical side as well with the underground expertise. So I think there's that relationship there. Yeah. You lean on them a lot, which I think this is what the Duketon one is as well. But I think the investment banks would be licking their lips looking at Regis at the moment. Like no one makes money out of them just doing buybacks and divvies and printing cash. There's no food on the table for anyone. Like that's
shareholders do.
Shareholders do, but not the investment banks. Like they're struggling.
Not the 6011.
The 6011 crew are struggling to get by. Got to think of them. But as I said, they could. The options, as you stated, could pay dividends, could start a buyback. They could just continue Trop and Duketon for freaking 7 years or something, and just. Similar to what Silver Lake did with the Mount Munga tenements and everything. They did add on, the Doré assets and everything, but like they could just continue that trajectory and build a cash pile, just similar to what Ramelius did. The most logical first M&A play, I think, would be trying to get 100% of Tropicana.
Of course.
So you think of, I think Sunrise Dam, I don't think is like. I've heard 4 or 5 years or something, or that might be left there. And then once the pits finish at Tropicana and it just like they mightn't be able to feed the 9.5 million tonne anymore, like maybe Anglo Gold Ashani might look to de-Australia themselves a bit, like whether that might be their exit out of Australia, don't know. And then the fact that the mill there is like modular, they could downscale Tropicana. And if Regis then like, right, we've got the underground expertise at Duketon. We're already at Tropicana. Got first right for it, I assume. Similar to a Greatland Gold situation with Havieron Telfer. Like getting 100% of Tropicana and feeding those, like creating like maybe a 4 million tonne underground operation, continuing at depths of all those. That'd be a play.
They paid $900 for their 30%. When gold price was a lot lower.
Yeah, so
I wonder what they'd have to pay for the other 70.
Depends if you'd be able to, if you'd have to take Sunrise as well. And that's the thing. I don't know what the exploration potential is of Sunrise. If there's like if that can, because that's only 4 million tonne, I think. So it's not as big of a mill as Tropicana. I'm not sure if there's much more non-Anglo Gold Ashani mining to be done there or not. I don't know, I have any info on that, but it looks like Tropicana's got a lot of underground potential for multiple mines. So that'd be one.
Yeah.
And price tag permitting.
And having the right is helpful, because if Anglo left and someone else put a bid, sure, just match it.
But do you think they get it a bit cheaper if Anglo wanted out and Regis take on the liabilities for it or not?
What are the liabilities? That wouldn't be too much.
Have to be a bit of rehab and stuff.
Yeah, but whoever buys it has to take it on, right?
Yeah. Do you pay more for 30% on a percentage basis than you would to take the whole thing off someone that wanted to get out?
I reckon they'd have to pay $2 billion. Is my guess for the 70.
So
Well,
anyway, that's one bloody. That is one option anyway. So
Who else is on the shopping list, mate?
Oh well, let's work our way up the size of M&A, and we'll come to the big humdinger at the end.
So start big, then go small. And
Well, if you took smallerish M&A right now, maybe they could, like, if they wanted to, add ounces to their profile, be the taker, maybe like some opportunity in the Northern Murchison, mate, like Catalyst is one that's probably gets thrown around. Like they're 630 mil market cap now, looking to produce 200,000 ounces. I reckon getting rid of Henty would be the preference or the issue, because I don't think anyone, I don't know if they wouldn't want Henty. But you do get the plutonic infrastructure, pretty big gold belt with good historical production. Like you could pinch maybe Meeker as well, send the Andy Well high grade up to the plutonic thing. There's a bit of a so that's a bit out there. Yeah. But
I think the difficulty with that is they've Catalyst had such a good run. I mean it's been quite the turnaround, process and story and things like that. And they've had such a good run, and so it's like, they probably want to keep the good times going and actually execute on that growth strategy from like around 100,000 ounces to 200. So whether they'd want to sort of, perhaps cut that momentum short, I don't know. But it could be another new hub everything has a price, and it could be another sort of new hub for Regis potentially.
Yeah. Now let's have some fun. This is the good.
This is a good one.
Because Spartan comes to mind.
Ding, ding, ding.
Oh, good work, JD. Still going. You'd think there's an obvious reason why this can't happen. Which I'll get to. But Spartan with Regis, equivalent market caps at the moment. So there'd be and similar to Red 5 and Silver Lake in a way, where like your Regis cash could sort the funding out for Dalgaranga. You'd have three pretty long life operations between Duketon, Tropicana and Dalgaranga. But Ramelius in there holding the Spartan keys with the 20% holding. Imagine putting all three together.
Jesus.
That'd be...
What a company.
Mate, like you could create a 1 million ounce producer, potentially 5 big assets, Dalgaranga, Mount Magnet, Rebecca, Duketon, Tropicana. That'd be like a bloody Northern Star. WA focused. You still get to actually use, because then you could send Dalgaranga down to Checkers, use some of the Dalgaranga mill, which would probably happen anyway if Ramelius took Spartan, to get down to start building Rebecca, because I think getting Carasoo Dam off Northern Star at the right price is going to be very, very hard, near impossible. So I'm not banking on that happening. If they also downsize the Tropicana mill eventually, then you got bits there you can chuck at Rebecca as well, which is like just piece it all together.
It's a bit of like a Frankenstein mill.
You got half a mill. You got half a mill already, and I reckon I'm rooting for that as an outcome. Imagine that. That could be the next.
That'd be cool.
That'd be up there with the Northern Star. And it's like, it's not much wasted infrastructure between them, because there's synergies of one thing, but it's like having too much. Ramelius Westgold might have too much milling
in the same area.
And wasting a bit.
So
I'm going for it.
Divvy it up and put it to where you need it, sort of thing.
Yeah. That's that'll 6011 would never be happier if that happened.
Oh, bless.
Any other ones that you think?
No, I'm a fan of the buyback, shareholder distributions, especially if you're talking about the stock being like relatively cheap. That's the right time to do a return like that, and it's not the right time to do a kind of deal if you're thinking you're so much cheap. If you're talking about yourself trading at half the kind of multiple of a company that's making less cash than you, and why would you use that point in time to use any sort of deal? They don't have enough cash yet to do something real chunky. They could, sign up a bit of debt and do like that. But even so, you'd probably be thinking about issuing some sort of script or using that in one way or another. And again, then you're falling back on the problem on yourself being pretty cheap. So maybe in time to try and...
Or a bit of both, maybe. I mean, Perseus has done like 5 different things at the same time, as an example. Not to say you got to do that, but...
but Perseus have way more cash.
But they've got way more
cash.
Yeah.
They're like where Regis could be in a few years' time or something.
Yeah. I mean, we talked about Regis being somewhat vulnerable, given their relative, they screen just on a price to cash flow pretty low compared to their peers. Are they vulnerable to someone who wants to get bigger? Well, if they are, and that's the most attractive way for other parties to allocate their money, then they should allocate their own money to doing that too, because presumably the same, opportunities are out there for them as their peers. I think that's how good capital allocators should think. I don't think it's how gold companies tend to think.
No.
I think the more likely thing is they'll buy something. And I think Ravenswood's for sale and he's going to sell. Listening to your interview with Owen Hegarty, I think they're going to IPO that. They're going to trade sale. That's going to be a trade sale.
Yeah, so they'll have to distribute the cash.
Someone's going to buy that.
Yeah, and it's whether they want to have themselves in multiple jurisdictions. They have a Queensland side and a WA side. Mm-hmm. It's whether they're comfortable with that. I'm not sure how much of a hindrance that is or not, if that's a big thing or not, rather than being WA focused. Not sure. If
but
anyone
I guess
wants to give me an answer to that.
Something to consider.
I guess they were already kind of doing that before. I mean, they had Nick Phillimes on the other side of the country and, everything else here. So it's not something they haven't, done before.
Mm. What's the metrics on Ravenswood? It'd be probably over $1 billion price tag. What are they producing? Is it 400,000 ounces? 300.
I don't know for sure, but I think it's 3-ish, yeah.
It was
big tons, low grade, eh?
Sounds about right. I think it's a copper credit too.
Yeah.
Yeah.
Ooh, Evolution. Have a look at that. Evolution would make sense with their Queensland exposure.
Yeah.
I'm sure they'd have a look.
That's worth another episode, I reckon, Ravenswood.
Yeah.
Yeah.
We had an episode on it?
No, I think it'd be
since
it's coming up for sale, we better tell everyone who's going to buy it.
Yeah,
better let them know.
Oh,
through the PSA.
The thing I did miss with the synergies that aren't evident with this whole Regis Ramelius Spartan super merger that is 100% going to happen is probably no camp and building synergies because all the camps are there. Already in place, there's nothing that can be moved there. So that's a grounded job if I ever seen one.
Yes.
Get the Sicilian god Paul Natoli down at Rebecca to slap up a 5-star resort. That is what is going to happen. It needs to be there. Mate, all the workshops, all the offices, any piece of steel or wood above the ground is a grounded job. And once again, I don't know anyone else in the state that actually does it because I don't need to. I just know Paul and Grounded are the people that do it. That is all I need to know. That is all anyone listening needs to know. You call Grounded to build something on your mine site.
And
camp is the wrong word.
Oh, God.
These are lifestyle villages, Matty. These are nicer than places people go to retire at.
It's like...
You didn't want to come home, did you, when you stayed at them?
No, it's like Club Med.
That's it.
It's just you like going to Bali on holidays.
And you can tell the money miners how much better you worked when you were staying at a grounded resort back in the day.
Yeah, and how much more you work because you didn't want to come home.
Beer on tap. Oh, geez.
Pays for itself.
Luxury.
Yeah, 4 a day. That's all you get. Beautiful. Right, Ali GC, the Mac, upsized equity raise.
Yeah, so for those who don't know, Mac's the $1.3 billion odd market cap copper producer, which owns the CSA copper mine in Cobar, New South Wales, which they bought from Glencore last year. So yesterday they announced they were doing a $140 million placement, which was since upsized today to $150 million. And so the reasoning for this raise, according to the announcement, said to optimise Mac's balance sheet and de-lever by retiring its existing US $145 million MES debt facility at the earliest practical date, while also providing additional flexibility to pursue strategic inorganic growth opportunities. So post-raise, the sort of pro forma, net debt position becomes about US $134 million.
That
doesn't include the contingent payments to Glencore that can be triggered on price, right?
No, that's right. That's just the senior,
price, right?
the senior debt facility and the MES debt one. Before it gets paid. Yeah. And there were some interesting comments from the CEO, Mick McMullen, in that announcement. He said Mac has placed a greater focus on optimising its balance sheet and determining an appropriate capital structure, reflective of the asset quality and improved credit position, blah, 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 compared to previous years. Feedback from investors has been strong that moving to a more typical long-term capital structure is desired. That sounds to me like he's had a few angry phone calls and meetings going, fix the balance sheet, basically. The other point, it is clear that the existing MES facility will not form part of this, sort of capital structure going forward. As such, MAC has determined it's in the best interest of shareholders to retire this facility as, basically early as possible, reducing that net debt facility even further from, when they sort of first listed. More importantly, by raising equity today, MAC has full flexibility, to ensure it can pursue any strategic inorganic growth opportunities that may present. And I'll get to my sort of questions in a moment. Then going now, this is another extract from the announcement, use of proceeds and sort of the rationale. So this is speaking about this repayment of this MES debt facility. And they say under the terms of the facility and subject to, obtaining certain consents from the secured lenders, full prepayment of the facility may be initiated by MAC at the earliest being the 16th of June 2025. But then they also have to get permission from the MES debt provider to, if they want to repay it earlier than that date, they need permission from them as well. So in a nutshell, the earliest they can repay this MES debt facility is in 8 months' time, and that's provided consents and approvals are obtained from the secured lenders. And assuming that's done, they might be able to repay it even earlier if the MES debt provider gives them consent. So I'm left with a few questions after reading this. The main one being, why raise now? If the primary purpose of this raise is to de-lever the balance sheet, the earliest you can do that, subject to getting all these consents, is in 8 months' time, the 16th of June next year. Why are you raising $150 million today? Or alternatively, if that's what you want to do, which is, it's a good thing to clean up the balance sheet, sure, why didn't MAC seek those consents from the secured lenders or, separately from the MES debt provider to make this repayment at June or earlier than June as part of this capital raise?
So they definitely have not got the consent yet.
Well, they said that it's subject, they can do this subject to obtaining these consents. I mean, if that's the whole purpose of the raise, I would have thought that'd be, top of the list as something you'd want to do, like perhaps in conjunction with announcing this raise. And it just doesn't make logical sense to me. $150 million in the door now to do what? Collect some interest till 8 months later, till you can, potentially repay this.
It's in the use of funds, Ali, flexibility.
Yeah, but it's just like, so, I know, I get there was definitely, and Mick said it in his comment, there was sort of, pressure from shareholders to delever. Perhaps that was quite strong pressure. And even so, that just leads me to believe that there might be some, other reasons why they've raised the money, now sort of so, in advance. And, Mick's CEO comment said, by raising equity today has the flexibility to pursue these inorganic growth opportunities that may present. But that's a lot of money to ask for something that may or may not even happen. I want a Ferrari. Do you want to give me, $500,000 now because I might want to buy it? Like, it's just like, but I thought, okay, is there anything else that's happening between now and then? June, which is at present the earliest they can repay it, assuming get these consents. First thing I thought of is this month's quarterly maybe not so a great one. They tried to sort of preempt any thoughts on that by with an extract in the announcement saying they're pleased to confirm operations are continuing to perform strongly at CSA, on track to deliver the midpoint of guidance. Copper production of over 10,000 tonnes with C1 costs of US $1.90 to $2 a pound. So I think they've tried to bat that away pretty quickly. Given
we're in October now, they're obligated to do so as well, so to cleanse all the investors.
No, absolutely. So they've given sort of an outline at this stage, but they said they're basically going to provide more details in the quarterly, which is due out later this month. The other thing to keep an eye on is perhaps there's a potential payment of the contingent consideration to Glencore. So As a refresher, as part of MAC buying the CSA mine from Glencore, part of the consideration was for that, there's this copper contingent consideration of US $150 million cash, and that's structured as 2 contingent payments of US $75 million each, and they're payable over the life of mine of CSA if the average daily LME, closing price for copper is greater than US $4.25 a pound for any 18-month rolling period, and for the second one over, US $4.50 a pound for any 24-month rolling period. And I'm thinking, is there a chance that the first trigger, that $4.25 one, could be achieved? And the first date that can be tested from is the 16th of December, which is the first, 18 months post the acquisition going forward.
That 425, that wouldn't even be close, would it?
Well,
that'd be fucking ages away, wouldn't it?
Well,
no, that'd be close.
Oh, it is.
For an 18-month rolling period.
Yeah.
So
I mean,
basically,
if copper for the next sort of 6 months or so stays in and around where it is now, then it'd give it a good run.
So is that the weighted? It has to be above 425 that whole time.
It's just got to average it.
Average. So yeah,
The average of your rolling, your moving average.
Okay, so it doesn't have to be above it. It's the weighted average of.
it's pretty, just the average
Time
of all
weighted.
the closing prices of it.
Has to be above $4.25.
Okay, right.
Yeah.
Not it has to have been above 425.
It can dip below as long as the average.
Yeah. Okay. Yeah. Oh, so that could.
Well, because we saw that run up to $5, 20 something, and then it trailed off. Again, now it's sort of close to 440, 450.
Yeah,
Yep.
so I had a look at S&P just to see from June of last year to today, which isn't quite 18 months, and the average is actually about US $4 a pound. So it's not actually too far off of that that first trigger price. So it's probably one to keep an eye on. Like if copper continues, like you say, JD, if copper continues as it is, or rips further, we might see. Maybe perhaps not later this year, but maybe early next year that trigger payment, the first trigger payment gets achieved.
And that's US 75, so that chews up a good chunk of it.
That's a lot of money. And my final thought was, are these sort of inorganic M&A aspirations, which, I mean, look, that's peppered through all their, sort of communications and presentations and things like that. Are those aspirations perhaps more advanced than we think? By raising money now to, de-lever and clean up the balance sheet, which, I think is, a good thing. But the fact that they're doing it so well in advance when they can possibly repay it, is this perhaps MAC trying to signal and provide confidence to prospective, targets that they might be, thinking about and looking at, that, our balance sheet is strong, we're acquisition ready, and it's more of a positioning piece in some respects?
Yeah.
I don't know what you guys thought.
They could get a bit. I was just looking like who's in the district that they'd go for, like Peel. So they're 70 mil market cap. So you wouldn't need too much to take them out.
Yeah,
120 or something.
You're probably going to have to pay a hefty premium to get that done, though.
Yeah, even like 100% premium's 150 mil or 140 mil to take them out.
Yeah. I'm not. Yeah, that's an excellent theory. When we've talked about it before, but it hasn't happened. That I'm not as negative about the raise right now, even though the messaging is confusing, all that sort of stuff. Like the thing that's always worried me about MAC is there's too much leverage, and I'm excited if it delevers and gets more kind of durable throughout the potential volatility that you can have in commodity markets, and the faster they can remove that risk, the happier I'll be as well. And I get that they're raising it well in advance of when they could pay that like Spod Mez facility back, but that's a tremendously high interest rate that they pay on that facility. It's like, it's extortionate. I think it's like nearly 20% or something like that on that Mez facility. Was it like 18 odd?
Sure.
I remember just looking at their interest repayments. When you look at their cash flow waterfall, and I pay a lot of money in interest repayments. So yeah, like I'm all for them sort of paying that down. I think realistically, the only way they were going to be able to get there was going to be with more equity, because they had to. It was a SPAC that paid a lot of money for an asset, and the only way they could get the funding away was to put as much debt as possible in there and then gradually delever with pipe, with IPO, with subsequent equity raises. I thought they might time it with an acquisition of something else. But if you're patient and you're waiting for the right deal to do, or if you're just getting more capable to embark on the deal you want to do, I don't hate it. Yeah, I don't hate it.
We did a whole episode on just how stacked they were with debt about a year ago before they were going to be listed here on the ASX. So definitely a good thing. A lot of layers. Yeah, a lot of sort of complexity. And also just on the inorganic growth front, there was a data room article, Bridget Carter, saying that they'd passed up on a $1 billion takeover of Neves Corvo in Portugal. So I think for the M&A perspective, I'd be more inclined to look at a bigger deal rather than a bit part one. I think that's how they would kind of be thinking about it.
Yeah. Mount Isa is the one that eventually
probably
makes sense.
Sticks out. Yeah.
Like, you've got a party that has a history of doing a deal with Glencore, and Glencore kind of probably won out for the right price at Mount Isa.
I think in summary, I think that the actual purpose, delevering the balance sheet and getting it closer to net cash is a positive thing, and I am for that. My question's more so centre around the execution. So, and why perhaps if you want to, stop those very expensive interest payments as soon as you can, I'd be, racing to get those sort of consents and waivers from the senior lenders and the mezz debt lenders to get that done as soon as possible. So
but once you got the consent, it doesn't matter by the sounds. They've still got to wait till mid next year. Is that right?
Unless so that's for the senior lenders. They've essentially got to give approval that you can do that in June. But then there's another consent you can get from the mezz debt lender to say, can I pay you before June?
Okay, right. Gotcha.
Yeah, so
who
knows?
There is an ability to pay that mezz before June. Okay.
Yeah, and I'm sort of saying like, well, why wouldn't you sort of done that all at the same time as this raise? But who knows, there might be coming out
Maybe you can't
soon.
get the consent without the cash.
There might be more complexities that we aren't aware of that there's a reason of how they've gone about it the way they've done. But no, I'm keen to see what happens there. But yeah, overall I think, positive getting that, balance sheet closer to net cash.
Very good, GC.
Well done.
Sensational. Buddy, we got one to finish off? Nah.
All right, we'll call it a day there.
Call it a day.
That was a ripper segment too. You'll never know what it was.
Maybe we'll talk about it another time.
Maybe, JD. It wasn't uranium because I would have definitely talked about it. And I will never delete MMS off the show notes. Ever. Probably even when they're not sponsoring us. I'll leave them on there.
Who else wouldn't you delete?
For the memes.
Oh, well, I'm not deleting for this month. Grounded, CrossBoundary Energy, Sandvik Ground Support, CRE Insurance, Greenlands Equipment, K-Drill, MMTS, Australian Earthworks and Haulage, and our great friends at Spark. Hootaroo Money Minds.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.